Welcome to the Poundcast, the Digital Pound Foundation's podcast, dedicated to explaining and discussing all aspects of a digital pound and the impact of new forms of digital money. Your host is Jannah Patchay, Policy Lead and one of the originating members of the Digital Pound Foundation, and today Jannah will be in conversation with Lee McNabb, Payment Strategy Lead at NatWest. In this introductory episode, Jannah and Lee will discuss some of the key questions often asked about digital currency, such as what is a digital currency? How does it differ from the money we have today? And what's the difference between digital currency and cryptocurrencies like Bitcoin? What can we do with digital currencies that we can't do today? And what impact might digital currencies have on our future financial system?
I'm Jannah Patchay, Policy Lead and an originating member of the Digital Pound Foundation. And today I'm joined by Lee McNabb, who's Head of Payments Strategy at NatWest Bank. Morning, Lee. Welcome and thanks for joining us.
Good morning, Jannah. Thank you for having me, and hello to everyone out there in podcast land.
So let's start with a little bit about you, Lee. What brings you here today, as in what brings you to this point in your life today where you're talking to us about the digital pound? What do you do at NatWest Bank?
Cool. So what brings me here today is your lovely invite from a few weeks ago. What brings us here today in terms of this topic and conversation? So at NatWest, I look after strategy and research for payments across the organization. And to be fair, that means many things, many different hats. NatWest as a payments provider is a scale one. So I think we touched something like 1 in 4 payments is the stat. We've got millions of customers in the retail space. We do 1 in 4 commercial customers, so that we're the biggest corporate banker as well. So obviously with that becomes a systemic responsibility within the UK PLC. Payments at the core of what we do in banking. We either move money, hold money, or lend money, and that move money bit is integral to the entire piece, and that's payments, right? So my role is effectively what is the future of payments and how does that impact, and what are the opportunities for NatWest as a group across all the franchises and functions that we have. And obviously a huge part of that over the past, 12, 18 months has been digital currencies. What do digital currencies mean? What do they look like? Different shapes and sizes. And then ultimately, what are the implications and opportunities for an organization of our size and scale, and I guess central importance to UK PLC.
Great, thanks. So let's start at the very beginning. What is a digital currency and how does it differ from the money we have today? Because I don't really think about, the money that I use if I'm not using cash. I don't think about it as non-digital as such. So how do we differentiate between digital currency and other types of money?
It's a great question, and you're right. If you asked any person in the street their view on the differences in money, they wouldn't have one. They wouldn't understand the difference between public and private. They would understand the difference between cash and, I'd argue, electronic money. But to them, electronic money is just the digital representation of cash that moves around, that they can use their phone to do, they can use the internet to do. They put their cash in and then they can get cash out if they need to. So arguably, we already have, in many ways, digital currency in the electronic form. And if you think of what the Bank of England do and the cover we have through what is the FSCS, we effectively already have a publicly backed form of money sat in the bank. But it's quite different from what we would term as digital currencies. So I see digital currencies now almost on a spectrum. And on one end of the spectrum, we have your, I guess, traditional types of cryptocurrency in terms of Bitcoin, other types. I think there's over 10,000 different types of coins now in that space, which is a bit frightening. But Bitcoin's arguably the poster child and the most famous. It's been around for over a decade now. And that's a privately issued cryptocurrency, but that sits on that digital currency spectrum. And as we go through, we have what's called stable coins. They're arguably still privately issued, but the idea of them, and we won't go into the news last couple of weeks, but the idea of them is that they remove the volatility that is associated with the traditional crypto like Bitcoin. So they are linked or pegged, whatever language you want to use, to a fiat currency, for example, One McNabb pound could be linked to one fiat sterling pound. So it removes that volatility piece. And as we go through, and there's different shapes and sizes of them as well, right? But let's not go into them in too much detail. And then on the other end of the spectrum is your central bank digital currencies. Some are live globally. In the UK, as you know, we are kind of in investigative mode, but they are arguably more equivalent to cash. Now, people still say the digital cash. I don't fully agree with that because, and we'll go into this later, there are different innovative methodologies or applications that you can use with a CBDC. That means it's nothing like cash, but it's the same way as cash because it's a direct call on the state. It's public money, not private money. So that's how I would articulate the differences between what we term as digital currency.
Okay, so we've kind of got cryptocurrencies like Bitcoin on you might even say it's often an offshoot of the spectrum, and then we've got the spectrum of public digital currency, which is your central bank digital currency, all the way through to your privately issued stable coins, which could have various structures and various consequences associated with those structures. But again, we're not going to dive too deeply into the events of the last few weeks. But I think the key question is, what can we do with these sorts of digital currencies that we can't already do with our existing payment systems and with our existing forms of money that we have today? And why should we why do we want digital currencies?
Sure, that is the £100 million question, or 100 million CBDC pound question, I guess. I think it depends on what we're referring to. The simple answer is everything we can do today, but potentially more. And there's still so many unknowns here. And if I'll split it out between, let's go stablecoin first and then CBDC. Now, in the stablecoin kind of environment, the differences that we might see, think of what Facebook were trying to do with Libra or DM. Think of PayPal potentially having their own currency. And then what you've got within the kind of ecosystem is a privately issued coin by a private company, which has a completely separate network from the existing infrastructure that we see today. So if Facebook and Libra and in its evolution in DM, obviously it's kind of rest in peace in many ways, but if that had survived the kind of regulatory central bank challenge that I think they probably expected it to, then what we'd see that's different is actually a separate form of money that people can move within the Facebook environment. So think of Facebook Marketplace, think of the global acceptance of and movement of said money to something like 4 billion users worldwide, whether it's Facebook, Instagram, WhatsApp. That's completely different from what we have now in many ways. To flip that to a CBDC perspective, there are a few nuances, and they apply across all cryptocurrencies, but there are a few nuances that I think we need to probably bring to life that may be different from what we have today. A big part of that, which is often touted, is programmability. What does that mean? I mean, that's the ability to effectively program the money that you have, the ability to control where that money is spent. And that sounds a bit mum and dad bankish, doesn't it? But that can be the issuer of that currency that gives that program.
I was going to go more for Orwellian, really, but
yeah, exactly. I didn't want to go down that route. But yeah.
But why is that a good thing then? What are some of the good things we could do with this?
Exactly. Do you know what? And in many ways, Jannah, that's a good thing and a bad thing. But think about if that controllability was given to the user. We have it now, right? With our card payments, we can control where we spend. Banks can control where it's spent from a regulatory sanctions perspective, but equally users can control where they spend. So giving that flexibility and that control to the user could actually be quite powerful. It could be quite empowering. Again, ultimately it's down to control, and there is always going to need to be a balance, right? And another difference is you can actually time bound the amount of time you have to spend said currency. In China, the digital yuan pilot, they've actually put a kind of date on the currency for it to be spent as part of the test and learn, right? And that's not that when they don't spend it, pump, it goes in a puff of smoke and you never see it again. It just converts back to kind of traditional commercial money. And the debate I think we need to go through and everyone's view is equally prominent in this, is, as you've said, is that better? Is that worse? Obvious concerns will come up around data privacy, control, the kind of Orwellian approach that you suggested there. If the government were, for example, to send benefits in a CBDC, but then restrict where those benefits could be spent, so on utility, on food, for example, is that right? I don't think the government would want to do that. But is that optionality and that innovation arguably something that takes the UK forward in terms of its money management, or is it too far?
Okay, so it sounds like from what you said, when we ask ourselves, why do we need digital currency? What are we going to do with it? To some extent, this has already been answered by the private sector actually being out there and doing things in this space. And the company then formerly known as Facebook's announcement of the stable coin formerly known as Libra is really what kind of spurred a lot of central bank interest in this space back in, was it 2019?
2019,
yeah. But where have we actually come in a more material way since then? Because I think back then, the response of central banks was to really react to this as it posed a potential threat, as you've touched on, to their monetary sovereignty, their ability to control monetary policy, their ability to have oversight of all those transactions going through that, multi-billion user network and things like that. But what kind of learnings have we had in the meanwhile from central banks on what the actual usages of this might be in real life?
And that's a great point and a great question, to be fair. And you're right, 2019 was an interesting year. Obviously, we were pre-pandemic. Digital currencies were already in kind of circulation and discussed, but CBDCs, to be frank, were fairly quiet. And Facebook, I forgot they changed the name actually, but yeah, whatever they're called, the Meta now, is it? So the artist formerly known as Facebook at the time, when it announced and launched its white paper, I think it probably shocked and woke up a lot of central bankers. They thought, oh, wow, we actually need to start thinking, because to the points you've made, a privately issued money fundamentally challenges the way we manage the monetary system today as we know it. And I don't want this to go into an economics debate, but it's a reason we have central banks. It's a reason we have control and fiscal control and all the good stuff that I don't understand enough about. But it fundamentally almost flew through kind of like a massive curveball at central banks to go, wow, we need to do something about this. And as digital payments and digital money evolves, because that's what this is, we're already part of a digital evolution. We've already been part of it for the past 10, 15 years, right? I just see this as the next step of that evolution. But to go back to the question around, well, what have we learned? I think what we've probably learned is that central bank digital currencies, whilst as an idea are great, when you go into the detail of it, it fundamentally raises a few pivotal questions. And importantly, these questions differ based on geography. And so the learnings that we've got differ based on geography and what each country is doing. And to bring that to life with a few examples, if we think of, say, Sweden, which is quite advanced from a pilot perspective with the e-krona, that's very much been done because they face a culture and a country which is rapidly cashless. And so they have an inclusion challenge where actually you can go shopping in Sweden and you cannot pay with cash. Shops will not accept cash. So they've then got a population of people who are excluded, but not in the way that we would see exclusion in the UK. It's a different type of exclusion. So they've got a very specific pain point. China, as I called out earlier, is an interesting one. China obviously have quite grand political global aspirations from a digital reserve currency, shall we say. They've also, in China, from a payments perspective, the banks have lost control, shall I say. It's very different from the UK, and they are dominated by the two biggest wallets over there. So if you ask someone who's kind of shopping or living in China, most of them don't know who they bank with. They just know who they pay through. And so I think the Chinese government recognize that there's a competitive angle that needs to be overcome there. Obviously, China also has different kind of social, economical challenges as well that is behind the yuan. Some of the ones that are live now, because we have got quite a few that are live, albeit that I wouldn't say they are in they're almost in emerging or smaller kind of demographics from a financial perspective. They've got tangible problems. The Bahamas, the West Indies, hundreds of islands that are disparately spread with no one central ecosystem, no branches, and the ability or the need to move money across them seamlessly. So it solves a very specific problem for them. So it's all down to, well, what's the problem within the geography, which then comes to the UK. And the UK is a different beast, really, because we've arguably evolved quite rapidly from a digital payments perspective, whilst not leaving anything behind. We didn't kill checks when perhaps in hindsight, some may say we should have done. We still have cash. We still have millions of customers that use cash. It's declined, it's declining, but it's still millions of customers that use and rely on cash. We have faster payments. We have, well, arguably close to instant payments. So we have that infrastructure. We're with the MPA, the new payments architecture, we're improving that. So arguably we're almost quite advanced in terms of what we do and how we do it. So some of the obvious use cases that exist in other countries don't exist in the UK. And I think it's the biggest challenge that the Bank of England is wrestling with, if I'm honest. And you can see that through the previous two papers, digital money, retail CBDC. They're really wrestling with what it means to them. We've then had the HMT announcement that brings stable coins into the regulatory regime for a payment provider, which, again, to use another baseball analogy, brings another curveball to the UK and what the Bank of England needs to do. I think they've got a consultation which is due imminently, June or July, in terms of the next step of retail CBDC. And I look at it from a big bank perspective, and I think, well, actually, in the retail space, why do you need it? Because arguably, right to the start of this conversation, general users won't have a clue the difference. Will it just cause more confusion, more complexity, more challenge? Potentially. You look at it and go, well, actually, in the wholesale space and the cross-border space, maybe it makes more sense there. But then the Bank of England themselves have said, we've already got a wholesale CBDC, it's called RTGS. We just need to tweak some of the challenges like opening hours, etc. And then actually that will give some cross-border efficiencies. And the Bank of England has a consultation out right now looking at the future of RTGS past 2024. So all these things kind of come together and you think, well, there's actually quite a lot going on. And it's not just a digital currency debate, it's much, much broader. So learnings to your question, I think we're still learning is the kind of one line that I probably should have said at the outset.
So what I'm hearing there is like in certain jurisdictions, you know, there's sometimes a more specific angle or a more specific use case due to the various political or economic or social specific circumstances of that jurisdiction. Whereas in the UK, we're kind of still struggling a bit to see where we fit into things, and at least from the CBDC perspective, and how a CBDC would best serve the needs of the UK, because I guess that will impact its design and things like that as well, and what design considerations we take into account. And it sounds like there, actually, from what you said, the geopolitical considerations around it might actually be a stronger case than the need internally for a retail CBDC, for example. Again, without getting too far down the rabbit hole of, you know, the future of the global economy and things like that. I know the Bank of England has said that they see the UK as existing on that spectrum of public and private digital currency. And the question that the government is considering at the moment is where on that spectrum the UK should sit. So it seems as though in the UK, at least, we will continue to see both public and private, or both private, I should say, probably being the biggest contender at the moment, and public forms of digital currency emerge over the next few years. And how do you see that kind of coexistence shaping the financial sector for a start? So you are from a bank. Banks have very specific concerns about these new forms of digital money, as the Bank of England refers to them. And I know recently the American Bankers Association has come out very strongly to the Federal Reserve against the introduction of a CBDC in the US, citing the potential for this to take reserves, to take deposits away from banks and to affect the ability of banks to function. So, starting perhaps with banks and then looking at other kind of participants in the financial ecosystem, what's the impact of these new forms of digital currency likely to be for them? Can they adapt, or are they likely to be replaced entirely by other things?
Sure, there's so many pieces to that question. You're right not to go down a rabbit hole, because we could go into a whole economics debate, which I am neither qualified nor intelligent enough to hold with anyone. I guess from a bank's perspective, lots is the simple answer in terms of what are we considering and what are we looking at. As we discussed earlier, there's far more questions than there are answers at this point, and we look at it and think, well, across the spectrum of digital currencies, let's be frank about it, there are different implications, there are different threats, there are different opportunities. Many fall outside what we could call payments, but to bring it to life, we have, I think, 14 or 15 million retail customers. We have quite a high percentage, I think it's close to 20%-ish, who are trading in this and move money to the Bitcoins of the world or whatever the other coins are. So we have a challenge there where we go, oh, okay, so we've got customers that are doing this, not for what a CBDC type rationale, but for probably a fear of missing out or an investment type rationale. So we have a challenge and a question there, like, so what role do we play in that space? Then right the way through that spectrum, we try and look at it and think, well, what are the implications for us? And again, we don't truly know yet, because if I go right to the CBDC end, even the Bank of England, as you said, they're still thinking about what it will look like, what it will be designed like. And for us, it's, well, what does the commercial model look like? We're already facing a significant regulatory roadmap, ISO 20022, MPA, as I've just mentioned. They're going to be hundreds of millions, billions pounds at industry levels of change, whole new financial market infrastructure. Do we want another one? Can we have another one? To your point around, will they coexist? If they do coexist, what are the questions around interoperability? What does interoperability look like? What does fungibility look like? So the ability to move seamlessly from one type of money to another, because they are different. Who manages that? Who pays for that? Who runs that? Who does all the sanction piece, the AML, the KYC, the bits that I don't think people realize banks do and do well. I don't know, I'd say that selfishly, but do well. It's a big business and it's a difficult business, and just keeping money flowing is a real challenge. If we go like a lower level, some of the questions we're facing, and that obviously the Bank of England need to look into, will you be limited on how much CBDC you can hold? I think countries like Germany are looking at capping the amount of CBDC that you can hold, because to your point there, if you're moving money from commercial bank money, which we have now, which is the electronic money I called out earlier, to central bank digital currency, depending on the construct of it, banks can't lend against that, which is back to my point, move money, hold money, lend money. If we're not holding money, we can't lend money, or if we do lend money, we lend it through a alternative route, which can be potentially more expensive, which impacts the end consumer. Will CBDCs be remunerated? Will they be interest bearing? If they do, they become a potential competitor for banks, which I don't think the central bank would want. All these kind of questions at that macroeconomic level are massively important. And you said yourself that the Fed have challenged it. The House of Lords challenged CBDC recently as well. I think they called it a problem, a solution looking for a problem, I think they called it. So you can see, even in the UK, the difference of opinions that come to the fore. And then from a customer perspective, what about data? What about privacy? What about security? What about the inclusion piece? Fraud. I mean, fraud is the biggest crime by volume in the UK, which is frightening, right? Banks have a huge role to play in protecting customers in that, but we're not the only kind of actors in that space, if you like, both the good ones and also the bad ones that are committing it. How does it link to other things like digital ID? That's massive. We don't talk about that enough, I don't think, in the UK. It's arguably one of the, I think, the spaces where the UK is behind other parts of the world, where a digital ID fundamentally improves the payment and commerce experience. We don't have one. I would say we need one, but arguably if you have a CBDC and done in a certain way, you inadvertently get one. how can that help facilitate the improvement of money flow? So yeah, lots of implications, lots of challenges, lots of opportunity, and all big banks and indeed other financial service providers, whether they be merchants, acquirers, small businesses, need to start giving consideration to, I would say.
Okay, so I think what you're saying there as well is that, you know, it's not just about CBDCs or stablecoins themselves, it's about the ecosystem around them, everything you need to support their optimal usage, which includes digital identity and things like that as well. In terms of where we're going next in the UK specifically, things are proceeding a bit slowly on the CBDC front. So the Bank of England does have its engagement and technology forums in play. But it doesn't look as though anything is likely to happen in the near future, notwithstanding this year's forthcoming discussion paper. It does seem as though there's more movement in the stablecoin space and in the push to introduce new stablecoin regulation. And dare I say it, our approach actually seems fairly pragmatic at the moment, in contrast in some respects with other jurisdictions, and for example with Europe's introduction of MiCA, which takes a slightly different view of how some of these assets should be treated, where we're saying let's try and broaden the perimeter of what we call e-money and what we call payments instruments and payments activities now, and bring in things that look slightly different but ultimately will behave in a similar way. What else do you think is needed to build that kind of effective environment in which different stable coins can coexist together, but we can still promote, you know, some level of inclusivity and not give rise to, you know, walled gardens and to a very disparate payments infrastructure? How can regulation help support that?
I mean, again, great question. There's lots there. I think the steps we are taking in the UK, you're right, cautious kind of progression, but I think it's the right way of doing it. Let's take the learnings from other countries that are perhaps more advanced than us, and let's understand how their potential benefits, threats can feed into what we do. I think in terms of the UK, there will be a level of coexistence. I think you've mentioned it there, the HMT announcement a few weeks ago. There's clearly appetite from the Treasury to encourage, I guess, crypto adoption, and that's broader than just currencies, right? That we're going into a world of DeFi, we're going into a world of Web 3.0, we're going to a world of non-fungible tokens. Because what I think an important message to land is that digital currencies now are just one part of what is a broader tokenized digital economy of digital assets. And indeed, at NatWest, we look at it in that light. The digital currency piece is part of our digital asset work. It's all part of what is a broader set of implication. And to my point earlier around banks holding money, moving money, and lending money, the digital currency piece is the movement of money, but within this, in some ways, separate world, and in other ways, from a CBDC perspective, the infrastructure we kind of know and love and use daily. And the challenge is, how do they coexist? And if they do coexist, how do we just make sure that the customer at the end of the day is getting the services they need, the protection they need, the outcomes they need, and that the ecosystem can continue to thrive competitively, right? This is important, competitively as it is now. And there isn't an answer for that yet. Back to my point around interoperability, fungibility. Let's fast forward 5-10 years, let's say 10 years. And I think the Bank of England have said themselves they wouldn't likely see a CBDC until the next half of this decade, which sadly isn't that far away because it's only 3 years away. And again, what flavor of CBDC? Is it wholesale? Is it retail? Is it a combination of both? But we fast forward 10 years, we could in theory see a world where within the regulatory regime under the payment services regs, under e-money regs, we've now got stable coins. We have stablecoin providers live in the UK, whoever they might be. Let's say Meta Reaverse or PayPal Reemerge or whatever it might look like. customers are still going to be using the different types of money, but there'll still be a question of how do you get on and off or in and out of each. So how do you get from your PayPal currency back into your NatWest account or your Starling, Monzo, Barclays, Santander, whoever it is, the other account or wallet? Your point around walled gardens is an important one, because ultimately that's not what we want to create a thriving economy. We want the ability to be able to move seamlessly within those different types. If we fast forward maybe 20, 25, 30 years, we'll maybe perhaps see a kind of convergence back where we're in a world where actually it's all simultaneous. I don't know, that's probably a bit too future gazing for anyone really, but I think in that period we'll definitely see a coexistence. I just don't know what shape, size it'll look like.
Okay, so we've covered quite a wide range of topics here, and we've gone big, we've gone global, we've looked at the meaning of it all. But perhaps we can conclude by bringing it closer to home and to the ultimate end users, who will be consumers and businesses. What does this actually mean for them, for us? How's it going to impact us and what we do day to day, and the way we transact with each other and with businesses and with government day to day? What difference is it going to make in our lives, actually?
That's the probably next £100 million question. At this moment in time, I don't think we know. Is the honest answer. I don't think the industry knows, and I think that's the biggest challenge that we face over the next 12, 18 months. I think it's a pivotal period with the consultation paper coming out. It's a pivotal period to actually define what we think it looks like. To my point earlier, if you went to ask a customer now whether they realize the difference between public and private money, they would 99.9% would not have a clue. They genuinely wouldn't understand the differences. So we need to be very careful that we don't just land in a position where it's exactly the same in the future. Does it matter to them? Well, I have a wallet, and within that wallet I will have, or an app, within that app I'll have my NatWest commercial money and my Bank of England central bank digital currency money. Can I spend it in the same way? Can I spend it in different ways? Is one controllable or programmable and the other one isn't? I just think that there's massive challenges that we need to overcome. There are potentially some benefits. To my point earlier, arguably a digital currency is a digital ID, and that can make customers and their lives more secure. It can make their payment experiences more kind of seamless and easier. It could, in theory, lower some bank services and their fees, or encourage financial intermediaries to kind of lower costs of what they offer. It could improve checkout, but again, we already have that kind of service. It works now. My app, my Apple Pay, my Google Pay, my card, my contactless, it works, and it works fine. Why do I need different money that sits behind it? These are all the questions we really need to answer as an industry. What are the pain points we're trying to solve? What are the predominant or dominant use cases that need to be designed for? And where can customer benefit be had across the full spectrum? So that's not just a CBDC space. And we touched on cross-border earlier, for example. That's a known pain point in the industry. Could stablecoins solve some of the challenges that we have in that world? These are all the things we need to get to the bottom of.
Thanks so much for joining us today, Lee. It's been a really interesting conversation, and really appreciated your thoughts on this fascinating topic, which obviously is going to increasingly dominate the conversation, I think, and the nature of money over the next few years. Yes,
excellent. Thank you for inviting me and having me, and I've enjoyed it. Thank you.
Thanks to all our listeners for joining us. You've been listening to the Poundcast, brought to you by the Digital Pound Foundation and hosted by Jannah Patchay. Subscribe to the podcast to stay informed of all our future shows, or sign up for our newsletter to get all the latest updates at digitalpoundfoundation.com. See you next time for more news about a digital pound.